As I told you from the very beginning, we are partners in development, and I believe the state-owned enterprises cannot exist in the absence of the National Assembly Committee, especially the PEC committee that is conducting oversight on them. So as you may understand that the exercise has been a settled practice, not today. It's not a witch hunting exercise. It's to engage one another and improve upon our performance. That is the whole purpose. So I am very much grateful. Like I want to go to the next item, that is the affirmation of oath by anybody who is going to be responding to certain questions from the Social Security and even the NAO who will be doing the presentation. So the clerk will come on board to administer the oath of affirmation. Mr. Chairman, she is coming.
I do affirm that I will speak the truth, the whole truth, and nothing but the truth. So help me God. Thank you.
Thank you so much. Mr. Chairman, we are in receipt of this report from the National Audit. Then we went through the report and we have observed a lot of things, but we'll allow the National Audit Office to take us through the procedures would have been, they are going through the findings and the recommendations. Where after the findings, the recommendation, your management will also respond as it is captured here. From there, we will debate on it and look at it, how can we improve upon them. So that is the procedure. And I now give the baton to the National Audit Office to take us through their findings.
Management Development Project, representatives from the National Audit Office. It's a pleasure for me to present the report before us on behalf of the Auditor General. Now, what I will do is I would go through the introductory part of the report, and then I'll hand over to my colleague to take us through the audit findings. So what I will do is to skip the executive summary, then I'll refer you to chapter 1, page 10. I want to start with 1.2, which is motivation, because we carry out this audit for a reason. So if you look at 1.2 on page 10, we have reviewed some reports that had informed us the need for us to carry out this particular audit exercise. You can see that on paragraphs 2 and 3 of 1.2. Then the other one will be the objective of the audit, which is 1.3. The objective of the audit on the same page 10 was to assess whether Social Security, Housing and Finance Corporation ensured growth in the Social Security funds to maximize benefits to members and that the benefits were timely and accurately paid. Then I will refer you to 1.4 on the same page, which is the audit questions. We had 3 main audit questions. Of course, we have some sub audit questions, but the 3 main audit questions are on page 10, 1.4. The first one is Social Security guaranteeing the Social Security funds growth to maximize benefits for its members? That is the first question that we ask. The second one is the Social Security Housing Finance Corporation ensuring that the members' benefits are paid correctly and on time. Finally, question number 3, is the Social Security Housing Finance and Corporation ensuring the appropriate monitoring and evaluation of claims processing? So these were the 3 main audit questions that we had asked during the course of the audit. So if you look at page 12, I would also want to read out the scope of the audit because that's also important. So the scope of the audit covered how Social Security Housing Finance and Corporation manage the National Provident Fund and the Federated Pension Scheme to maximize benefits to its members and retirees in the Gambia in a timely and correct manner during the period January 2018 to December of 2021. Again, on the same page, on 2.2, that is the methodology. I would want to mention that we have reviewed documents during the audit exercise. We've also had some interviews and some discussions with staff of Social Security and some beneficiaries. And we also administer some questionnaires during the course of the audit. So, Honorable Chair, this is the methodology that we have used as far as the audit is concerned. So when you looked at 3.1, that is talking about system descriptions of Social Security Fund on page 14. I would allow you to read that on your own at some point in time. Then if you looked at page 3.2 on page 18, that is also about system description of Social Security Fund management. This is a literature that any of us can read at some point in time if we have not read it already. Then having said that, I would want us to go straight into the findings of the audit, the findings and conclusions as well as the recommendations on page 22. This discussion would be led by Omar Sabali, Senior Audit Manager, as he already indicated. Omar will read out the audit findings and the recommendations, and then we'll allow, as Chair said, allow management of Social Security to read out management response, and then we move on. Thank you. Sabali.
Thank you, Mr. Drame. Mr. Chairman, once again, good morning. It's the same audit findings as like that of the NAWEC. The structure will still take the same format. On top, you will see the criteria. The criteria will always tell you what should have been done or what should have been there. And then the body of the finding would be the condition you found on the ground. And then followed by the causes, then the consequence of that finding. So I will start by reading chapter 4 on page 22, if we are on the same page. It should be on page 22. This chapter presents our finding, conclusions, and recommendation in 3 sections. Section A relates to the accuracy and timeliness of benefit payment. Section B relates to the funds, the fund growth, and Section C relates to the implementation and monitoring of specific initiative implemented by Social Security. 4.1, Section A, accuracy and timeliness of benefits payment. 4.4, that is a sub to 4.1, 4.1.1, timeliness of benefit payment. The management of Social Security has developed a benefit processing schedule for efficient claim processing. This benefit processing schedule has the information requirement for the key process stages. Action officer, the date the file is received and forwarded from each action officer, the standard and actual days for each process. The maximum standard service time in this, as established by the processing schedule for each claim, is 16 working days, i.e. from the date of the claim received to the date of payment. For the period under review, Social Security claim processing on average range from 2.4 months to 4.5 months. Figure 2 shows the average processing time trend over the period under review. That is figure 2 in that graphic demonstration there. Yeah, that is the source is the audit analysis, and then based on the claim received. So figure 2 shows on average, that is the table you are seeing below. On average, Social Security was able to reduce the claim processing time from 2018 to 2021. For the National Provident Fund, the average processing time was around 3.5 months, that is 3 months 15 days in 2018, and it slightly rose to in 2019, then fell in 2020 to 2021 to about 2.4 months, that is 2 months 12 days. This is 350% more than the standard processing time. For the Federated Pension Scheme, Social Security took about 4.5 months, that is 4 months and 15 days, to process claims in 2018. This has reduced to 2.5 months, that is 2 months and 15 days in 2021. However, the processing time is still 369% more than the standard processing time. We further analyze the processing time into categories based on the length of processing time, and the results are shown in table 7 and 8. The tables are here below here. For the National Provident Fund, table 7 shows that for the period 2018 to 2021, only 32 claims, that is 7%, were processed within 16 days, standard processing time. 323 claimants, 67%, wait for more than 1 month before they receive their benefits. 223 claimants, that is representing 46%, wait for more than 2 months to receive their benefits. The table 8 also demonstrated some of the figures there. For the Federated Pension Scheme, table 8 shows that for the period 2018 to 2021, only 30 claims, that representing 17%, were processed within the 16-day standard processing time. 51 claimants, that is representing 29%, waited more than 4 months before they received their priority benefits. The Social Security Regulation 2005 also required the corporation to observe cooling off a period for National Provident Fund claimants who go out of gainful employment before the statutory retirement age. The cooling off periods were either 3 to 6 months. From 2020, due to the outbreak of COVID-19 that put many members out of employment, Social Security amended this regulation to remove the cooling off period for all the claims. This is aimed at providing some level of social protection for those members whose livelihood were affected by COVID-19. We analyzed the processing time of claims requiring the cooling off period during 2018 and 2019, as shown in the table 9 below. That is on page 24. From table 9, for the period 2018 to 2019, Social Security was not able to timely process 46 claims, that is 30%, for which a cooling off period of 3 months was observed. For claims for which 6 months cooling off period is observed, Social Security was not able to process 29% of the claims. Causes of the delay in the processing of the claim. Our review of claim revealed that the most significant factor responsible for delays in claim processing is the contribution gaps that were detected during the processing of the claims. Contribution gaps are months for which no contribution is made for the employee by the employer. Our review of claim showed that 30% of the claimants under the National Provident Fund has contribution gaps when they apply for claims. 19% of the Federated Pension Scheme claims were delayed because of the contribution gaps that the employer had to settle before the claimant's benefits were paid. According to an interview with the benefit unit, Social Security communicated contribution gaps to employers during the claim processing instead of when the gaps arose. This is because that is the time this is because The president. This is because that is the time the corporation identifies such gaps for individual employees. Social Security has to wait until the employer settle this contribution gap before the benefits were paid to claimant. So the length of processing time depends on how quickly the employer were able to settle the contribution gap that Social Security identified and communicated. For 27 claimants who could not wait for the employers to settle the gap, had written to Social Security to carry on processing the claim without waiting for the contribution gap to be settled. Other factors responsible for the delay in the processing are in table 10. Some of them I'll just count them as they are listed in the table. Some of them are competition errors. We noted 22% of the claims delayed were the results of errors. Okay. Then number 2, interview schedules, and then number 3, no schedules in the system, that is EDMS, for the months of termination. Liability letters from employers, biodata corrections. Note, these delay factors were based on our review of 29 claims that exceeded the 16-day standard processing time and had notes from other officers in the workflow to explain why the claims were delayed. We assess the extent to which the delay factors lengthen the processing claim. The results of the analysis is shown in table 11. Some of these delays are due to competition errors, biodata corrections, no schedules in the Social Security system, interview scheduling, waiting liability letters from employers, contribution gaps, etc. So table 11 shows that overall contribution gaps, missing documents, and unprovided liability letters had the biggest impact on the length of claims processing. For example, claims that were delayed by contribution gaps took an average of 129 days to process. Effects of delays in the processing claim. Delays in obtaining the benefit deprive the claimant and their dependent of social well-being by needed when they are out of employment. For example, in 2020 and 2021, delays resulted in pension arrears payment to 41 pensioners, 49% of the claims review. This means that about half of the claimants had delayed that resulted in pension arrears. These arrears range from 365 to 111,342. This means that these benefits, which may represent a significant source of livelihood for these pensioners, was not timely paid. We are not timely paid. For the National Provident Fund, 27 claimants, 42%, representing 42%, who were affected by the contribution gaps, has written to Social Security to sacrifice contribution gaps because of the frustration of delay caused by recovering such contribution from former employees. So we recommend Social Security should review all its member accounts to maintain an accurate information about their accounts. 2, initiate a program to communicate and recover all contribution gaps in respect of its existing members. 3, Social Security should ensure that remittance schedules are adequately reviewed so that contribution gaps are timely communicated to employers for prompt payment. The corporation should not wait until a claim is filed to communicate and pursue a gap in member contribution. The corporation should also provide timely accounts information to employers and employees. Then 4, overall, Social Security should initiate normal retirement benefit processing when the members are in their final years of scheme membership. This will ensure any other bottleneck is addressed before benefit payments fall due. This should therefore eliminate or minimize pension arrears.
management response from Social Security.
Thank you, Honorable Chair. I would ask the Managing Director to call on the Director of Operations who handles such matters. Thank you.
Okay, in fact, the procedures is like this. How it is captured here, this is how you are going to respond.
Yeah.
Okay.
Okay, honorable members, thank you very much. The recommendations are noted.
Okay. 4.1.2, determination of benefits for the National Provident Fund claimants. Social Security Act 2050 requires Social Security to maintain an account for each member of the National Provident Fund and shall credit to a member account the money paid as contribution by both the employer and the employee. Social Security Act 2005 states that the amount of benefit payable to a member may be a proportion of the total balance of the member's account with Social Security together with accrued interest. Of a sample of 24 claims we reviewed, we noted that Social Security made errors in computing 21 of the claims, that is 88%. Any $1 error may result in incorrect benefit of $1 plus the yearly interest based on a compound payment, interest payment. Our review revealed that Social Security made two types of errors in computing claimant's benefit. The errors were posting errors and summing errors. Posting errors are errors of wrong amount being entered in the member's account. Summing errors are errors of correction. Incorrect yearly contribution calculated based on the monthly contribution of the member. Figure 3 shows the type of errors made regarding the 24 sample claims we reviewed, causes to incorrect payments. So figure 3 shows this percentage. So Social Security computerized system called Navision for maintaining members' account contributed to the posting errors. The system does not ensure data integrity because of data loss. In addition, the system is vulnerable to unintentional changes in the member contribution because it cannot notify data entry clerks that the month for which a particular contribution is entered already had its contribution entered. As a result, it will add up the subsequent entry to the earlier amount entered for that month. Therefore, Social Security must fully verify each month of a member contribution during processing of claim to ensure that accurate member accounts are used for benefit computation. Our review shows that Social Security accounts verification found that only 24% of the members' account were accurate during the verification. So it is probable that verification officers will make errors in the verification process since it's entirely manual process. Summing errors are the responsibility of the benefit processing officer. They should establish the total yearly contribution based on the verified member account submitted for benefit computation. The benefit computation were further verified by an other officer to reduce the risk of paying incorrect amount to claimants. The error led to Social Security paying 11 of the sample claimants, representing 46% benefit, that were short of their entitlement, and 10 of the sample claimants, 42%, were paid more than their entitlement. The underpayments amounted to $29,409.58, and the overpayments amounted to $39,170.05. The total incorrect payments accounted for 1.57% of the total benefit paid to 24 sample claimants. The individual incorrect payments ranges from 0.04% to 46.7% of the benefits the claimants receive. That is, the details of those ones are shown in Appendix 8. So we recommend Social Security should develop a system where member accounts are accurate as any point in time. This will ensure that rigorous and full account verifications are not needed during claim processing. The benefit unit should strengthen competition verification regarding yearly contribution before signing off the benefit computation report.
Management respond.
Honorable members, the recommendations are in order, but I just want to make a statement. When I came into Social Security and this thing was available to me, when I read it, I told them, did somebody tell them that what we are doing, that's why they wrote this thing? Because the things mentioned are in order, but already Gridman's thing, so I think was already ahead of this now as we are talking now. But because the report completed a period behind, that is why. But as we are talking now, these things are history. We are working on our SMIS, what we call SMIS. It's an automated processing system.
Thank you so much, MD.
Thank you very much.
I just want to observe, like how it is written in the report. Okay. Let's respond. The other part will come to a discussion where you will be given the opportunity to make some clarification.
Thank you, Honorable. Then noted.
Okay.
4.1.3 on page 29, if we are on the same page. Yes. Social Security Act 2015 requires Social Security to collect contribution from employers and can apply penalty charges where payments are delayed. The corporation can further take legal actions to collect contribution for defaulting from defaulting employers. Of a sample of 222 claims, 65 cases representing 30% of the claims had contribution gaps identified during the claim processing. Contribution gaps are amounts for which no contribution is paid for the employee by the employer during the scheme membership. The contribution gap advice slip, which is sent to the relevant employer, detail the relevant period for which no contribution is made for the claimant. Contribution gaps mean that Social Security had not collected the monthly contribution from the employer. Social Security communicated contribution gaps to employers during claims processing instead of when the gaps occur. This is because that is the time that Social Security identified the gaps for individual employees. Therefore, claimants only realize that they have contribution gaps when they had claims for their benefit. This untimely communication of the contribution gaps to employers resulted in lost contribution for Social Security. Based on the contribution gaps that Social Security raised for 65 claimants at the time of processing their claim, the corporation has lost $852,122 in contribution. This represents 8% of the total benefit paid to the 65 claimants that had contribution gaps. In addition, the contribution gap reduced the membership benefit entitlement. From our review of the contribution gap advice slips that Social Security raised during the processing claim, we noted that claimants lost contribution ranging from 75 to 326,329, or 4% to 108% of 0.04, yeah, to 108%.
1,008%.
Yeah, 1,008% of
Is
the
it
benefit.
a typo or?
No, it's correct. It's correct. The typo is mine, and the error is mine in pronouncing the figure. Of the benefit they receive. So, recommendation. We recommend that Social Security ensure that the member accounts are timely verified, and any contribution gap that is identified is communicated to the employer on time.
Management response.
4.1.4 determination of the benefit for the Federation Pension Scheme claims. Rule number 4 of the Federated Pension Scheme gives the benefit formula for a member at which at least 10 years of pensionable service. That's the formula there. According to the rule of the Federation Pension Scheme, Social Security Act 2015, the retirement benefits are computed based on the final pensionable salary of the contribution member. In the case of a member or former member whose salary changes by at least 20% in 12 calendar months before the date he or she has last in service, and the changes was not part of a general pay increase allowed by the employer, pensionable salary is the average salary over the 12 months preceding the retirement, as the managing director may approve. From our review of claims, we found that the completed months of service were accurately determined by Social Security in the computation of the benefits. However, we noted problems in the way the final salaries were determined in the benefit formula. From our review of claims, we noted that Social Security derived the final salary to use in the benefit formula by multiplying the salary of the month of termination by 12. The interview with the benefit unit corroborated this fact. For a sample of 50 claims, we found that 5 claims representing 10% were not computed based on the final salary of the claimants. Table 12 shows the calculation we did. From our interview with the benefit unit, these differences arose between Social Security because Social Security believed that the employers had intentionally increased the salary few months before retirement. Therefore, Social Security concluded that this increase had to be ignored and instead use the salary before the salary increase is made. However, from our review of claims, we found that Social Security has not consistently treated claims where the salary is changed a few months to termination. Table 13 shows this example of cases treated differently, even though the salaries were recently changed prior to the termination. Table 13 shows that the claim number 1 to 4, Social Security had not used the final monthly salary of the claimant because the salaries were recently changed prior to the retirement. On the contrary, Social Security had used the final monthly salaries for claimants number 5 to 7 despite the recent changes in the salaries. This inconsistency in the way recent changes to salary were treated is caused by Social Security not establishing a common reference point that determines the extent to which an increase in salary can be considered appropriate for use in the benefit formula. From our interview with the benefit unit, it was revealed to us that benefit officer checked salaries of members in the last 3, 4, or 6 months to ensure that the recent salary increase are not in use in the benefit formula. Therefore, benefit processing officers uses their discretion to determine whether a recent salary increase is appropriate for benefit computation. Furthermore, the benefit officers did not document this procedure of verifying salaries in the last 6 months. Therefore, it is impossible to perform a review of whether the benefits officers appropriately applied verified salaries in the last 6 months. The use of wrong salaries in the benefit formula resulted in claimants being paid wrong benefits. From the 8 claimants that were not correctly based on the final salary multiplied by 12, 6 resulted in underpaid benefit and 2 resulted in overpaid benefits. Table 14 shows or demonstrated the text on top. So we recommend Social Security should use some sort of averaging system to determine the pensionable salary. It is important to use a reference period that is sufficient to provide an effective safeguard against salary manipulation. Benefit officers should document the verification of salaries over the reference period. To minimize the risk of human error in the computation, we recommend that during the first computation, the benefit officers should provide reference of the final salary of the claimant. Example, the page of the remittance schedule on which the claimant's name appeared, the numbering etc. This will provide a quicker and more efficient confirmation by the verifying officers. Yeah.
Management response.
Thank you, Honorable. A recommendation noted with the following comments. For customer with SSHFC number 1044662, there was a typo error on this computation. GMD 314,232 is the correct annual gross salary and not GMD 214,232. For customer with SSHFC number 10,444,2, this claim was sent 3 months prior to member's retirement. As a result of Project 59, the computation was done based on the latest available schedule, in bracket August 2020. Because the employer was not up to date on contributions, then as well, the other schedules came late. The gross salary for the same month, in bracket $33,300, was also indicated on the SS2 form by the employer, as well as the pay slip. Completion date was October 1st, 2020, while the schedules from September to November 2020 were received and scanned in December 2020. For customer with SSHFC number 1057152, the completion was done based on the latest available schedules, in bracket February 2020, and the gross salary was the GMD $17,065.81 burus. The gross salary used was consistent for both January and February of 2020. Completion date was June 2nd, 2020, while schedules for March 2020 were received as of June 8, 2020. For customer with SSHFC number 1044627, the completion was done based on the latest available schedules, in bracket January 2021, and the gross salary was GMD $21,281.25 burus. Completion date was April 14, 2021, while the rest of the schedules were received as of April 26, 2021. For customer with SSHFC number 1051506, the completion was done based on the latest available schedules, in bracket January 2021, and the gross salary was GMD $12,961.75 burus. Completion date was April 19, 2021, while the rest of the schedules were received as of April 26, 2021. Please see Addendum 2 for further details.
Thank you, Director. Mr. Chairman,
Yes.
and like I said in our previous sitting, once they provide their management response, there is always a follow-up option for the auditor to comment on what they have said. So that's why you are seeing an audit comment coming there. So we said we have reviewed your management comment, and the finding is adjusted to reflect the cases that are not consistent with the assessment criteria. Management response point to the fact that these claims were processed based on the available contribution schedules as at the time of the processing the claims. However, interview with the benefit processing officers revealed that the salary increase prior to retirement was sometimes ignored because it was felt that these increases were made for retirement purposes. Then we reiterated that. We further recommend the Social Security liaise with the employers to obtain the most recent contribution schedules that is relevant to the claim being processed. So we move on. 4.1.5, pension increase for pensioners. The rate increase. Rule 19 of the Federated Pension Scheme states that Social Security may, from time to time, increase the level of pensions payable under its pension schemes. This increment is determined by the following consideration. 1, the general rise in the cost of living. 2, the actual salary and wages increase throughout the Gambia. And 3, the inflationary effect on the level of incomes. However, the increase in the pension shall not be more than the latest estimated rise in earnings made by the actuary. The estimated rise in earnings made by the actuary for the relevant period are as follows. So, below the table, we found that Social Security has not increased pensions as in line with the estimated rise in the earnings made by the actuary. The pension increase rate ranges from 2.7 to 33% for the 2018 increase and 5% to 65% for the 2022 increase, depending on the level of the monthly pension. Figure 4 shows those percentages. That's a graph there demonstrating what we were saying. From figure 4, the estimated rise in earnings made by the actuary is represented by the green line. Any pension increase rate above the green line represents pension increase rate that were above the actuary's estimated rise in earnings. For 2018, the pension increase, i.e. the blue line, the appropriate pension increase rate were only applied starting from monthly pension earning of 20,000 of 20,000. For the 2022 pension increase, i.e. the orange line, the appropriate pension increase rates were only applied starting from the monthly pension earning of 50,000. Pension increase rates for monthly pension below 20,000 for 2018 increase and 50,000 for 2022 increase were not in line with what the actuary made. Appendix 6 to these reports. From our interview with Social Security, the 2019 and 2022 pension increase rates were determined by the management and approved by the board. The maximum Dalasi increase was said to be based on the amount affordable and sustainable by Social Security. Percentage increase were established by trial and error until the most successful rate were established for the different bands of existing pensions. The higher the pension band, the lower the percentage pension increase. From our review of the board paper on the approval of the pension increase rate, we noted that the pension increase proposal has stated that the latest actuarial valuation report has backed the pension increase proposition up to 65%. However, our review of the actuarial valuation report 2020 has only recommended using a uniform rate of 4.5% per annum in the long run for pension increase. Furthermore, the pension increase proposal has not made mention of the estimated rise in earnings made by the actuary for the board's consideration. This would have informed the board on the maximum rate of pension increase allowed by the Social Security Act 2015. From our interview with the board, it was revealed to us that Social Security uses higher rates than the estimated rise in the earnings made by the actuary because they felt that pensions are so small for some pensioners that using the same rate will result in insignificant increase by using a low rate for low pension earners or very large increase by using the higher rate for higher pension earners. For example, using 5% across will result in a monthly increase of $45.50 for pension earning of 910. Conversely, using 50% across result in an increase of 20,000 for pensions earning of 40,000. However, Social Security already had a system called guaranteed minimum pension that was aimed at protecting pensioners from pension earning that cannot sustain their livelihood. Guaranteed minimum pension assures that no pensioner earns below a certain monthly pension determined by management. This guaranteed minimum pension is adjusted when pensions are reviewed. The minimum pension for January 2018 to December 2021 was $1,210.30 and was revised to $2,000.2 effective January 2022. Social Security increased rates more than the estimated rise in earnings made by the actuary, resulted in the increase of pension costs. For every $1 increase by 50% instead of 6% has resulted in an incremental annual pension cost of $5.28. A pensioner receiving $5,000 resulted in an additional pension cost by $26,400 per annum that would have been avoided had the corporation used the estimated rise in the earnings made by the actuary. Timeliness of pensions increased. According to an interview with Social Security, the corporation review pensions for an adjustment every 3 years so that the pensioners are effectively protected from inflation in the country. The pension increase review is tied to the actuarial valuation dates. Accordingly, the review should be scheduled January 2018, 2021, and so on. For the period under review, Social Security carried out 2 pension reviews, one in 2019 and the other in 2022. The pension review that was supposed to be carried out in January 2018 was done in 2019, and then the pension increase was applied retrospectively. This resulted in pension drawbacks, payments of 13 months to active pensions. The pension review that was supposed to be paid in January 2021 was made in January 2022. However, this increase has not been applied retrospectively because Social Security management decided not to apply this increase retrospectively because the federated pension scheme has deficits of about 42 million. According to an interview with Social Security, pension increase are not timely implemented because the rate at which the pensions are increased is tied to the actuarial valuation report. These reports are currently not timely published after the end of the year to which they relate because they rely on the audited financial statement, which are not readily available for the timely actuarial valuation. For example, actuarial valuation report as at 31st December 2017 is published in August 2019. So when the pensions were reviewed, it was applied retrospectively to the active pensioners. Delaying in pension increase means that Social Security has not timely provided the level of benefit that was aimed at protecting pensioners from rising cost of living. So we recommend Social Security should increase pension beyond the estimated rise in earning made in the latest available actuarial valuation report. When new minimum pension is established, existing pensioners earning below the minimum pension can be moved to the new minimum pension. However, pensioners who receive above the new minimum pension should not earn more than the estimated rise in the earning of the actuary made. Social Security should use the latest available actuarial valuation report in their pension review without waiting for a new report to be published.
Management respond.
Thank you, Honorable. Noted.
Section B, as promised, Mr. Chairman. This is Section B of it. Fund growth to maximize members' benefit. 4.2.1, interest payment to members of the National Provident Fund. Social Security has the mandate to initiate investment policies that will yield reasonable returns to its members and undertake investment considered beneficial to the members. We benchmark returns to members of Social Security with the interest rate that the National Social Security Fund of Uganda paid to its contributing members, which is 12%, 12.5%, and 9.65% for the financial year 2020 to 2021 and 2021 to 2022 respectively. Social Security paid similar rates between 1994 to 2010. The period 1994 to 2010 represents the most suitable stable interest rate payment by the corporation. The board should establish a Social Security committee or committees that have the function to consider and review investment policies and decisions that the corporation undertakes to maximize the welfare of the contributing members. For the period 2018 to 2020, Social Security has only paid interest to members in 2020. The interest paid to members in the year 2020 was 84.8 million. This represents 2.09% interest rate to members on their accounts. The corporation has not paid interest to members for the period 2018 and 2019. For the years 2013 to 2015, the Social Security paid rates in the range 0.19% to 0.5%, 0.19% to 0.5%. For the years 2016 to 2019, Social Security has not paid interest to members on their account. Figure 5 shows the decline in the interest rate over the period. That is the graph below. Figure 5 shows that shows that between 2014 and 2019, Social Security has paid interest rate at 0% or near zero. From 2020, the corporation has started paying interest at the rate of 2%. The fall in the level of interest paid to members is attributed to the performance of the investment portfolio of the corporation. Table 16 shows the investment portfolio that the Social Security held in the National Provident Fund and the Federated Pension Fund. The table shows the text I was reading. And then below it are the notes explaining the figures on there. The Social Security Committee should have the function to consider and review investment policies and decisions. However, according to the internal audit report of the Social Security titled Benefit Processing Audit for the period July 2019 to December 2019, the Board Investment Committee has not been active as of 31st December 2019. According to our review with the Department of Finance and Investment, the investment committees were last active in 2018. This was because of the change in the corporation leadership. Therefore, investment decisions were taken by the board based on the recommendation made by the managing director and investment department. This has impacted negatively on the ability of Social Security to effectively undertake investment that maximize returns for the members. As a result, according to the internal audit report on investment dated 23rd October 2019, the Social Security investment decisions were normally given to select committees on an ad hoc basis. The dormancy of the committee also affected monitoring of investment. Our review of the internal audit report on the investment revealed that Social Security has not effectively monitored its investment portfolios. For instance, for the year 2019, investment properties accounted for 34% of the investment portfolios of the NPF. Social Security activity report for 2019 stated that the return on investment properties portfolio was 25.4%, being the highest return on any portfolio held by Social Security. However, the internal audit report on investment has stated that the Department of Finance and Investment has not maintained a proper documentation and review of the annual tenancy agreement for one of the investment properties. that is the NTC complex, since January 2015. This has resulted in 12.1 million areas over owed to Social Security by the tenant of this property. For the year 2019, this represents 8.9% of the total income that the corporation reported, and it is 137.5% of the rental income for investment properties that the corporation held. According to the internal audit report, the failure to effectively collect rent due on investment properties held by the Social Security was attributed to Social Security not actively pursuing the tenant for the rent. For example, or for instance, the tenants that were occupying the NTC complex were last officially communicated to since January 2015, i.e. 4 years about the rent payable. The non-payment and low interest rate affect the growth of the members' fund. Members' funds are affected by contribution less benefit and an interest paid to members. Social Security has seen growth in members' fund for each of the years under review. However, the growth in the members' fund for the years 2018-2019 is wholly due to member contribution net of benefit paid to claimant. This is because no interest is paid to the members. For the year 2020, the interest on members' fund accounted for 27.2% growth in the members' fund, and then the contribution net of benefit accounts for the other 73.8%. Figure 6 shows the demonstration. From figure 6, the members' fund for NPF has grown from 3.8 billion to 3.9 billion, 3%. In 2019 and to 4.2 billion, 8% in 2020. The growth in 2021 is wholly due to a contribution net of benefit because interest rates were not yet declared as at the time of this audit. So we recommend that Social Security establish a structure that ensure that investment policies, undertakings, and performance are regularly reviewed. This structure should ensure that investment portfolios are well diversified, and then the performance of the portfolios are effectively monitored and reported so that the board has timely information for corrective actions.
Management response.
Thank you, Honorable. Recommendations noted with the following comment. As per the 2019 internal audit report, medical and health rent owings amounted to $4.1 million out of the $12.1 million contained therein. The auditors reported that the corporation has not effectively protected the welfare of the members for the period under audit. However, we need to put this into context because we were affected by the impact of the various executive directives amounting to over $2 billion Gambian dollars in principle, recovery of which is still a challenge, not including the loss interest, which could have amounted to over $315 million. Here is the list of investments that were imposed on the corporation through executive directives. 1. Galia, in bracket, 2 ferries. 2. Qatari, the GFFI, that's our investment at the Kamalo, called GGFFI. 3. Gamco. 4. Police barracks. 5. GCA, the Gambia Civil Aviation Authority, fire tenders and ambulances. 6. GGC loan guarantee. Number 7. GRTS satellite. Number 8. GIA Hatch. Number 9. NAWEC loans. Number 10. Kanila housing project. All the above investments are red herrings, including 1 NAWEC loan in bracket, bill, own, and transfer, bracket closes. The amount of this loan is 74,517,000. The overall recoveries to date in bracket December 2022 is 384 million 325,843 dollars 10 budu, leaving an outstanding amount of 1,615,674,156.90 budus.
Okay, thank you, MD. 4.2.2 Administrative expenses of the National Provident Fund. According to the pension valuation report for the Federated Pension Report by the World Bank, Social Security Fund in the Sub-Saharan African Social Security were not expected to spend more than 10% of their contribution on administrative expenses. We benchmark against Social Security and National Insurance Trust of Ghana, which has declined percentage of contribution revenue on the administration and operational expenses for the period 2017 to 2020, from 16% to 10%. Our review of the financial statement for the period 2018 to 2021 showed that Social Security has spent between 13 to 23% of its contribution on administrative and staff costs. This spending rate is unstable due to the changes in member contribution. When the administrative and staff costs are individually analyzed, the gap between the administrative and staff costs widened from 2019 onwards. Figure 7 shows or demonstrates that in the form of a graph. So from figure 7 showed that the total administrative costs, administrative and staff costs were as percentage of contribution currently stands at 13%. Administrative costs as percentage of contribution progressively declined from 2018 to 2021. On the contrary, staff cost is unstable, with the biggest change occurring in 2019. We recommend that Social Security devise cost control measures that ensure that total administrative and operational expenses are kept at or below the 10% of the member contribution, or it can otherwise efficiently use its resources to collect more contribution revenue.
Management response.
Thank you, Honorable. Noted.
Chairman, move to the other section, that is section C of the findings. Implementation, monitoring, and evaluation of processes. 4.3.1 Monitoring delay factors in processing claims. Various strategic management authors have highlighted that organizations should monitor and evaluate their performance for business success. For example, the balanced scorecard developed by Kaplan and Norton in 1992 states that organizations should develop indicators for different aspects of operation against which performance is measured. Similarly, Johnson scholars and within include performance monitoring and evaluation in their 6-step process for developing a critical success factor. Social Security used 2 different systems of documenting and monitoring claim process during the period 2018 to 2021. Number 1, for the years 2018 and 2019, Social Security used a paper-based benefit processing schedules attached as an appendix to this report for documenting the timelines of key processes in processing claims. Number 2, for the years 2020, 2021, the corporation moved from the paper-based processing schedules to a computerized system called the workflow. This workflow captures the actual start and end dates of each activity in the processing claim. For the years 2018 and 2019, when the Social Security was using the paper-based processing for monitoring claims processing, the benefit officers are required to document the actual time spent on each stage of the process. However, we found that officers have not documented the actual duration of each activity in the claim processing and why they took more time than the allocated duration. 4 departments of Social Security were involved in the claim processing. However, no specific department is tasked to ensure that the benefit processing schedule is accurately and fully completed. We noted that for the period under review, Social Security maintained spreadsheet record of members' claim that document the claim application and payment date. However, the corporation has not analyzed this data to help understand how long claimants wait before they receive their benefit. Furthermore, the corporation did not also document and analyze why claims were taking longer than the standard processing duration to process. The information provided by officers about the actual time they spend preparing a particular activity, performing a particular activity, is aimed at establishing bottleneck activities in the processing claims. So by failing to provide information on the actual time officers spend on each activity and why delays occur, Social Security was not able to document delays factors in claim processing. Though, according to the interview we had with the Director of Operations, delay factors are mostly member, financial, and bio data problems in the system. However, other factors responsible for delay were overlooked. As a result, Social Security do not fully appreciate other factors other than the financial and biography data problems as delays. This impacted evidence-based decision to address bottlenecks activities in processing claims as Social Security focus mainly on addressing problems of bio and financial data. Therefore, problems such as error of competition and scheduling interviews are overlooked as problems causing delay. Without evidence-based information on the factor responsible for delay in processing claims, appropriate corrective measures could not be taken to address all delay factors. Furthermore, it also deprived the top management and the board the opportunity to provide an effective oversight of how well members and pensioners are served, since reasons for delay cannot be related to specific area of operation. Therefore, we recommend Social Security should identify and document delay factors for each claim that happens to go beyond the desired processing length that the corporation determines. The aggregate of these delay factors and bottleneck activities will provide a useful insight into design and implementation of initiatives to correct problems causing delay in processing claims.
Thank you. Management response.
Thank you, Honorable. Noted.
I proceed. Yes. 4.3.2, the implementation and monitoring of Project 59. Project 59, implementation of Project 59. In 2018, the corporation introduced a program called Project 59. The program was planned for full implementation in 2021. Project 59 is an initiative to process members' retirement benefit when they reach the age of 59, so that the retirement benefits are timely collected when the members reach the statutory retirement of 60. According to the interview with the Department of Research and Policy Planning Project, Project 59 entails sending letters in the last quarter of the year to the respective employers, detailing the name of their employees who are above the age of 59 and due for retirement in the next 1 year. The employer were expected to provide accurate data of those employees to Social Security so that the benefits are paid on their 60th birthday. According to our interview with the Director of Operations, these letters were only dispatched to the employers in 2019 quarter 4. So, for the years 2020 and 2021, the project was not implemented. Social Security claimed that the employers to which the letters were sent had not cooperated with the corporation as they failed to respond to the letters, i.e. the information requested. We could not review the letters because Social Security has failed to provide a copy of the letters that they sent to the employer. However, according to the interview we had with the Director of Operation and Research and Policy Department, the letters did not contain specific information requirement that the employers are expected to provide in respect of each employee. Furthermore, Social Security faces data problems mainly in the National Provident Fund. This was acknowledged by the Director of Operation. However, an interview with the Director of Research and Policy Planning revealed that the Project 59 letters were sent mainly Federated Pension Scheme members' employers. The failure of Social Security to fully implement Project 59 has led to continued delay in processing claims. This is because the financial and biographic data problems are mainly resolved during processing of claims. This resulted in delay in the processing of claims as highlighted previously under the finding relating to timeliness of benefit payments. Monitoring and evaluation of Project 59. Various strategic management authors have highlighted that, that organizations should monitor and evaluate their performances for business success. For example, the Balance Scorecard developed by Kaplan and Norton in 1992 stated that organizations should develop indicators for different aspects of operation against which performance is measured. Similarly, Johnson and Scholes within include performance monitoring and evaluation in their 6-step process for developing a critical success factor. According to an interview with the Director of Operation, there was no evaluation of Project 59 for the period under review. From our communication with the Director of Internal Controls through email, Social Security do not develop an annual operational activity plan for the period under review. Operational activities are captured in budgets, which provides financial estimate for the operations. The budget have not documented how Social Security would implement and monitor Project 59. Social Security has not also developed a specific plan for how the project should be monitored and evaluated. As a result of the failure to evaluate the program, Social Security was not able to conclusively determine whether the project has improved the processing of claims. It also resulted in corporation failing to identify reasons why the employers had failed to respond to Social Security letter and how it can address these deficiencies. So we recommend Recommendation: Social Security should revise Project 59 and develop a comprehensive plan that defines the responsibility of each department. The plan should also include performance indicators to enable useful evaluation of the project. Specific information requirements should be included in the communication with employers regarding their employees retiring the following year. This would require Social Security to have specific information that is missing and what needs to be confirmed for each member by the employer or employee. Social Security should monitor and evaluate the implementation of Project 59 and lessons drawn for improvement.
Respond.
Thank you, Honorable. Noted.
I proceed, Mr. Chairman. 4.3.3, the implementation and monitoring of data cleansing exercise. The implementation of cleansing exercise. Social Security Activity Report 2018 stated that the corporation started a data cleansing exercise to remove or modify data that were incorrect, irrelevant, incomplete, duplicated, or improperly formatted in the database. The objective of this exercise is to ensure that the data which is to be migrated to the Social Security Management Information System, SSS-MIS, is accurate and its integrity is not compromised. However, our interview with the Social Security revealed that This exercise has been dormant for the period 2019 and 2021. Figure 8 details the description I've given in the text. According to an interview with the verification unit, they continue to maintain the regularized member account in a computerized system called the Navision system that initially created the problem of inaccurate member data. So the regularized data is still vulnerable to unintentional changes. According to an interview with the Department of Research and Policy Planning, the exercise was stopped in 2018 when the leader of the team carrying out the data cleansing had his contract expired. No other team was formed to continue the exercise. The failure to get the data cleansing exercise actively implemented for the period 2019 to 2021 prevented the Social Security from having accurate financial and biography data of its members. As a result, problems with claimants' financial and biography data were only resolved during processing of their claim. This resulted in the delayed benefit payment, monitoring, and evaluation of data cleansing exercise. Various strategic management authors have highlighted that organizations should monitor and evaluate their performance for business success. For example, the balance scorecard developed by Kaplan and Norton in 1992 stated that organizations should develop indicators for different aspects of operation against which performance is measured. Similarly, Johnson and Scape and Middleton included performance monitoring and evaluation in their 6-step process for development of a critical success factor. However, through interview we had with the various departments involved in data cleansing exercise, Social Security has not evaluated this initiative. Furthermore, Social Security did not document the number and list of members' data that were corrected. The exercise was revived in 2022. However, the team assigned to continue the data cleansing from 2022 continue not to document list of members whose data were corrected. As a result, the verification unit tasked to work on the financial data cannot say the progress it has made. The team says that the regularization of the member account is being carried out on employer basis. However, this could not give us the number of employers that they had completed so far. From our communication with the Director of Internal Controls through emails, Social Security do not develop an annual operational activity plan for the period under review. Operational activities are captured in budget, which provide financial estimate for operation. These budgets did not capture how activities are to be implemented and monitored. Social Security did not also develop a plan for how the data cleansing exercise was to be monitored and evaluated. In addition, Social Security has not set targets regarding the data cleansing exercise against which performance is measured. The activity report for 2018 to 2021 reported that the exercise will continue until it's fully migrated to the new IT system. However, no specific targets were set for this operational period. The failure to monitor and evaluate the data cleansing exercise has resulted in Social Security not knowing the level of progress it has made in correcting its member data or its impacted processes of claim. However, the corporation reported for the period 2018 to 2021 that the exercise has positively impacted processing time of claim. Furthermore, lack of monitoring and evaluation results in Social Security not being able to identify deficiencies in the implementation of the initiative or hold the team accountable for the work assigned to them without having knowledge of the deficiency in the exercise. Social Security was not able to take timely action to ensure that the exercise continued after 2018 data cleansing team was dissolved. In addition, the failure to establish performance indicators for measurable targets for the exercise resulted in Social Security not being able to effectively evaluate and effectively evaluate the effectiveness of the initiative because there was no standard against which progress is measured. We recommend 1. Social Security should maintain a record of member employers and employees whose data are regularized. 2. Social Security should keep the regularized financial records in a way that they are not vulnerable to unintentional changes. 3. Social Security should develop a monitoring and evaluation mechanism for the exercise. These include setting targets and evaluating team on this, and this effect the initiative has on claim processing time.
Management response.
Thank you, Honorable.